Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, November 8th, 2021. The NASDAQ remained a little bit volatile, but more range bound than we have seen over the last 3 to 4 weeks. We did see that initial gap lower yesterday at the opening of Globex. The market dropped down to a low at 16,256. And that was not even really tested today. Kind of gave a couple of hints that we might head down there and test it, but that did not occur. So where that's leaving us is the same position that we basically were in yesterday. I'm continuing to leave the 5 and the C, which are going to be actually right at that level, 16,448.50, and that we possibly have 1, and then an A, B, C for 2. And now we're starting in a third wave down. Now, you see the range did kind of stay tight, but we saw volatility in between there. And that was primarily because of the selling that we found out that Elon Musk was going to sell 10% of his holdings. But as I stated in our update last night, the real reason is because he doesn't want to pay the federal tax that's going to be imposed on those gigantic gains that he's now made in Tesla, being an primary owner of the company. Therefore, that continued to play into what took place today as the market declined and then rallied back. Now, the continuation of just trying to determine what really the market should be doing with the passage of the infrastructure plan, or the first part of the infrastructure plan. Part 2 has not yet been passed through the Congress and still has to be done. So part 1 will be signed into law by the president, and then all of those funds will start to get dispersed out to the states, to the contractors that are, et cetera, et cetera. As I described yesterday, or as I said yesterday in the update, I do personally believe that it's a very bullish thing for the country. And I do think it's a very bullish thing in terms of our infrastructure in the United States has been in desperate need of repair and rebuilding for at least the last 40 years or more. And we've witnessed that more on the roads and the bridges and the electrical grid and a lot of the water delivery systems, the water delivery within particular states have really gone downhill and are in desperate need of being replaced versus just being repaired. And also just the expansion of broadband across the country, so that's providing high-speed internet to everybody in every place in the country is, I think, very important for the next way the business is going to be transacted and how that will be needed. So I continue to believe it is bullish. I also think it is bullish in terms of getting people back to work. I think there are a lot of people that have been out of work for a long time and will welcome the jobs that will come along with this infrastructure plan, rebuilding the infrastructure of the United States. Of course, there's going to be a lot of construction, a lot of manual labor jobs that are going to be offered, but they will be offered with high pay, with benefits, et cetera, that will all be provided by the government. And so I think that it is bullish for us as citizens of the country. I think it's bullish for the economy because a lot of people will be put back to work and therefore will be contributing to the economy. And I also think that it is bullish for particular sectors that will be affected or be put into effect through the contracts to do all of this work over the next several years. And I believe it'll be a decade or so before everything is totally implemented within this plan. So the market needs to figure out a lot of forward movement in terms of who's going to benefit, how are we going to factor that in, is it already been factored in, et cetera, et cetera. So we saw some of that today. The Dow rallied, many of the stocks within the Russell rallied, but they couldn't hold on to it because there's still this little back and forth. and the necessity, do we have a correction coming or don't we have a correction coming? That still is sitting out there waiting to be figured out. So what we did see today, several times, 1, 2, 3 times to be exact, where the NASDAQ came down and it tested this hourly 50 moving average. And right now it is sitting at 16,302. And that contained things for today. We didn't really get below that. A couple of times we thought, okay, we're going to get down to here. But that's as far as it got. And that actually was a target most of the day, because that is where that hourly 50 was sitting. So once we started breaking below the 20, we would go down, give it a look, give it a test, bounce back off. Then we come back down again, give it a look, give it a test, bounce back up. And until that breaks, we have to continue to allow for a turn in the market, for it to go up, for it to go higher, to break above 16,448, 448, yeah, 448, and head on up towards 16,565. Now, we didn't even get close. Closest we got is 394. So today we did not break back above 16,400. Now that's a major level right now, and it will continue to be a major level that, or a hurdle that the market needs to clear. And until it does so, I, A, have to continue to allow for it, but B, it keeps downside in play. Now, how much Tesla got traded today? I mean, it was pretty good volume. It was like 58 million. And how much of that was Musk? How much of that was just everybody else selling in front of him? So it's very hard to determine what's left to unravel, what's left to sell. So I don't think it could have gotten done in one day, just because of the massive holding that Elon Musk holds. So that still is going to hang over the market. So it hasn't yet even been determined that we are now going to correct, and we are going to correct in a larger degree. And that is still my expectation. So whether we finally work out exactly how the infrastructure plan, and now that it's been passed, how that's going to unfold and what it's going to affect in the market, that I don't think is going to stop the correction that's now due. It may play out while that correction is happening, because we're going to determine that this all is going to take years to get implemented and to really get fed back into the economy to start to build it back up. So my expectations remain for an intermediate C wave down to take place, whether this goes up to 60,565 or not. I'm still looking for that move. If it goes up there, it's just extending this particular last wave up, which I think, by the way, by coming down as low as it did yesterday, I'm just going to reiterate, that seems to have started to really break down. But it still could be a fourth wave, because wave 1 of this minute 5 is at 16,216. So that's really what it's got to break to signal, oh, this is done, we're now going lower. So you see, we still have a lot of downside play before we can consider the completion of that intermediate degree B wave. Irregular as it was, it still is a B wave, it still is irregular, and it still has the potential to go up to 16,500 or above. So it needs to break 16,216. What's up first, though? It needs to break below this 50. Did it once, but did not close below. We get an hourly bar to get down there and close below. It'll start to show that additional weakness, and we may see some acceleration to the downside. But then that count would be 1, 2, and now we're just dropping in the third, which will form its own 5. And again, as I have explained before, we will get into that 3 of 3 move, which will be a point of recognition. And that's where I think a lot of traders or investors, or whatever we want to call them, will realize we are going down, the upside's done, and they're going to have to reverse positions. So that will add to that point of recognition acceleration, the point where they need to change their positions to factor what's actually happening in the market. So that would be the first. We need to break below that 50, and the hourly bar needs to close below. I can take this up one step. Let's take a look at the daily to see where the daily sits before we start getting acknowledgement from the market of weakness. You can see it's only come down and tested the daily 4, and it keeps touching it and bouncing off it, touching it and bouncing. In fact, that bounce happened in Globex last night. That initial opening in Globex yesterday is what came down and touched that 4, the daily 4. We still have support coming all the way down. We still have the 8 at 16,045. So we could drop 200 points and still only just hinting that we have some weakness in the market. So the real thing has to come down, the daily needs to come down and break below the 20, and that's at 15,692. So we can drop pretty far before the daily agrees that weakness is evident. And still, we will be well into this. If indeed it happens, we would be well into the intermediate degree C wave down. Now remember, that C wave would be expected to break below 14,368. That's the bottom of wave A. Wave C should break that low and continue to move the market lower. We'll work all that out once we have confirmation that that high is in place above 16,400. Once we've got that in place, then I will put Fibonacci extensions and we can look at retracements and we'll figure where all of our levels will be. Right now, that's not in play yet. Those are my expectations, but not in play. So back to the hourly chart. What we need to see, or what I'm looking for tomorrow, is the possibility of the continuation lower. The hourly needs to close, an hourly bar needs to close below the 50 at 16,302 to give us that first hint, at least on an hourly basis, that the market is experiencing weakness. Then we need to break 275, 223, 167, etc. Break below 16,100 and continue to head lower. Now, I will have, those are all support levels, by the way, coming off. And I will likely intraday, as this move progresses, could likely run some indicators in terms of, in fact, I'll put one on right now. It's not going to be extremely valid, but it can start to give us an indication if this indeed is a 1-2 coming off, what we can look for and possibilities of what a third wave will look like. So we can see that if we're going to be comparing, if this is a third and this is the first, those are big ifs. The market is not giving us that confirmation yet. So if it is, then minimal, we're looking for the third to be equal to wave 1, and that would be extreme minimum, and that's at 16,200. Now, what actually does come into play as a more realistic level would be 1.618, that wave 3 would be 1.618 of wave 1. And let's also put this into perspective. That's the first 5 waves down off of the high. 1, 2, 3, 4, 5, before I start getting excited that this larger C wave is in force. It's the first wave down. So I'm looking for 5 on my hourly. So 3 might bring us down to 16,082. Those are starting to break the levels that we need to see broken to give confirmation that those highs are in. So a lot of downside is yet to come, just to give us the strength or the support that the highs are in for intermediate wave B, and we're dropping in the C wave. So we continue to run parallel views, one being more bullish, the other one being much more bearish. So until we start to see the market break down. So again, my encouragement is to trade what's in front of us. Today was a profitable day, wasn't the easiest to trade, but the volatility was consistent and you had to get into the move. So a lot of it was just paying attention because they didn't just happen snappy, they were slow. and they were slow to develop and they were slow to kick in. And that was all based on just as the sellers and the buyers came in mass in the market. And there are particular times of the day when that occurs. So you just had to be patient with a lot of trades, but it did end up being a profitable trading day. So again, my encouragement is follow the moving averages. We're looking at the hourly, and then we can take it all the way down to the 5, the 2, and the 1 minute chart. As we can see, these are already lining up to continue lower. So this drop back down into the close and then the bounce back up, but it's still, we got the 20 heading lower, we got the 50 getting ready on the 5 minute chart, the 50 getting ready to cross over the 200, not a good sign. Not a good sign. In fact, if it happens in Globex as we start in about 50 minutes, then this is going to really start to slip, and that's going to accelerate. That's what'll push it down below. And then we're going to have the 200, a top, the 50, the 20, the 4, the 8. The 5 will be lined up. This already is. Look at this already is. So these markets are at least are very small, tight time frames, the 1, the 2, and the 5 minute. That's what we trade off. That's what I trade off. So they're beginning to show the weakness and will likely continue lower. The proof remains to be seen. So again, PayPal came out with their earnings, and right now the stock was up about 11, and now it's only up 2 post earnings. So it didn't beat by all that much. And I'm sure that's why they took it up and then brought it back down, because maybe the forward guidance wasn't exactly appealing. In any case, that's what was out there to be reported today, and that kind of slipped up and then back down. And we'll see how that affects our market. The weighting is not that high in the NASDAQ, although it does have a weighting. So again, tomorrow, I'm looking for confirmation of the downside. That's going to come via the hourly breaking this 50 and then heading down towards the support that we've now laid out here. And if it indeed breaks below 16,256, it's going to put a lot of support towards that high being the finishing point for that intermediate degree B wave, and that we're starting the C wave down. That's where I'm going to end it for today. Trade smart, trade using moving averages, use the Fibonacci, use the Elliott. Next update tomorrow, the 9th of November.